Okay, guys, it is October 6th, about an hour after the market closed. Going to do a very, very quick video on drawing trend lines. And the interesting thing here that I want everybody to note is not so much how to draw the trend lines themselves, we'll cover that, but understanding when a change of trend is occurring. Most people believe it is actually the minute that, or the second that the trend is actually broken, and that's not the case. And pretty good identity here in the spiders today on October 6th to get an idea of what I'm talking about. So I'm going to pull up my trend tool here, which we have the segment. We're going to start from the low of the day. Now, what you want to do while you're drawing an uptrend line, you're going to draw it from the lowest low up to the highest low preceding the high. So here is the low. We're going to go without crossing any price action. You don't go through any prices. Right there. From the low up to the highest low, up to the highest low that precedes the high. So here, right here, is technically the low before the high. Now, this spot right here is technically where the trend line actually breaks. But that is not how you identify a change of trend. The true way to do it, and I'll just draw some more trend lines here, you make a note of when the trend line gets broken, in this case an uptrend line, and you put a horizontal line at that spot where it stops after it breaks the trend line. Now, what will most likely happen, because you have all of this buying order flow in this case, you will at some point look to retest that high it just came from. And at that point, you will actually draw another line, which in this case is right here. Now, here's the point that I want to make. A change of trend on any time frame does not occur just when the trend line gets broken. A change of trend from an uptrend to a downtrend actually occurs after this line is broken, and especially after you have a close below that line. So what I'm going to do here is actually remove this line and make it into a horizontal line so we can get a very good feel for what we're looking at here. I will actually move the price over to the right so we can see the exact price. So what we have here is uptrend. Draw the line up without going through any price to the highest low before the high. This spot right here just after 11 o'clock is where we actually broke the trend line. Now you sell off. After this sell-off stops and starts to make a retest of the high, you draw this horizontal line. So now you have what we call a box. You have the lower box that is sold off after it broke the line. The upper box, which would be a retest of this high. So one of two things is going to happen now within this box. You're going to retest the high, take off, and make new highs and continue this trend. Or you get a close below this low, which we end up getting right here just before 1 o'clock. And that is when this uptrend finally breaks. So technically speaking, although the uptrend line was broken at 11, let's say 11:15, a new trend didn't actually start until around 12:45. So when we close below there and the first pause after that level gets taken out, you see we have 105.60 to 104.80. Technically speaking, that is the actual new short-term intraday trend on this 5-minute chart. Now, if we extrapolate a little bit and go into the afternoon, we could do the same thing from this point to here. Here's the downtrend from the high of this move through price action to the high preceding the low. We break the trend line here. We draw a line where it broke the trend line, and we take this line, which now forms the new low. So one of two things will happen. This will reestablish itself down and actually look at the perfect 104.74 level here as support, or it will close above this short-term high and a new trend to the upside starts. Now, what's interesting about this move right here, I'm going to tie this change of trend in with the VIX. Okay, so that's how you actually draw the short-term change of trend, or for that matter on any time frame. I'm going to bring the VIX into the picture here, and what we're going to remember is this 1230 window here. If we draw our lines in the VIX from today's high to the highest low in this case, preceding the low, we now put in a horizontal line. So this 25.18 is the low. This level right here is the previous high before this low. Here is where we actually break the trend line of this downtrending VIX, which means buying pressure. Now, what's interesting is we end up, let me draw another line here. We end up with this. This is where the downtrend in the VIX breaks and rallies to and goes sideways. So now we're caught with that same situation of break the trend line and retest the low and continue to the downside, or we break this new high off of this downtrend and start a new uptrend in the VIX, which would lead to a sell-off in the market. So you can clearly see here at around 12:30, 12:45, we finally close above this line, thereby establishing this new upside momentum or short-term trend in the VIX, which coincides with this 12:30 sell-off in the market. So when you learn to put together the internals with the price action and successfully drawing proper trend lines for short-term trends, which we call intraday momentum, you end up getting a really good picture of when to be aggressive and when to sit back and say, let the market tip its hand. So I hope that helps, and tomorrow we'll get a little bit more into some specific trades and how they played out during the day. So we are Keystone Trading Group. Any questions, please give us a call. We look forward to hearing from you.